Hi, this is Shop Talk. I'm Pia Ontiveros. Life insurance, like any investment, promises to increase one's financial security. It's often taken for granted, considered an extra monetary expense without immediate benefits, but also promises to ease financial burdens at the time a person retires. Considering the investment itself, one asks, is it actually necessary? And if the answer is yes, how can one use it as a tool for financial security? Today we sit with experts who can tell us what life insurance can do for you and the steps to take to choose the correct policy to secure yourself, your family, and your future. In this first segment, we're joined by Antonio De Rosas. He's the Senior Vice President and Chief Financial Officer at Pru Life and member of the Philippine Life Insurance Association. Hello, sir. Welcome to Shop Talk.
Good afternoon, Pia.
Good afternoon. So, well, can you answer the first question? Is it really necessary? Of course, you will answer in the affirmative, diba?
Yes, definitely.
You're with the industry.
I think life insurance is very necessary for everybody's lives. You know, people involved in this profession. It's a very, very noble profession because they are there to secure the lives of people, current and in the future. Okay,
but you don't. You know, of course, this is something that you can't use when you retire, diba? I mean, your family will only benefit from it.
Yes.
When you pass, right? I mean,
no, actually.
Or there are some schemes, no, that allow you to.
Yes, yes. There actually basic life insurance, what we call term insurance, is the cheapest form of life insurance. You pay premiums regularly, and should you pass away at a certain point in time, your beneficiaries, which most of the time would be your family, would be able to benefit from the death benefits paid by this scheme. Yeah. But then on the other hand, there are also other products which are more savings type or investment type, whereby you don't need to wait for your demise to be able to reap the benefits. You know, this life insurance company would set aside monies for you, and you would pay on a regular basis. Yeah,
just give us one short, very briefly, one example, then we'll go on to into it later. But like what kind of products are there?
Okay, therefore, for example, there are investment type products which we call unit-linked products.
Unit-linked?
Unit-linked, yeah.
Okay.
Pru Life is a leader in those products. Okay. And you would come in maybe and give us your money on a regular basis, and then you are insured at the same time. Yeah. And at the same time, your money will grow. Depending on the investments you choose. And at the end of a certain period, you can withdraw your money and reap the benefits.
So it can work both ways. It's life insurance and it's like just any ordinary financial investment.
Yes, it's life insurance and investment, but it's actually a life insurance product.
Okay, and do you find that more people are interested in something like that? You know, it's not so morbid and it's something that they can benefit from, that they can use even, you know, while they are still alive.
Yeah, naturally, they're more receptive to something that is more investment-oriented than protection-oriented. Especially here in the Philippines, people generally associate life insurance in the negative, and they consider it as an expense. But if you sell it to them as a savings plan, to secure their future while they're still alive, it is more sellable.
Okay, so it's a matter of selling, it's a matter of marketing it, it's a matter of couching it in nicer terms.
And also designing the product in a way.
Designing the product so that they can use it, reap the benefits. Yeah. Even long before their demise.
Yes.
Yeah. So do you find that there are a lot of people still in the Philippines? Like, do you have studies to show that it's difficult to sell life insurance in this country because Pinoys are, you know, parang, oh no, I don't plan to die right now. Parang ganun sila.
Actually, you know, there are studies comparing what we call the life insurance penetration rate. Life insurance penetration rate is actually the total premiums of everybody, you know, purchasing life insurance divided by the total GDP or total revenues of the country. In the Philippines, it's less than 1%.
And that means that very few people
avail of life insurance compared to neighboring Asian countries that go up to 7 or 8 or even double-digit rates for the advanced.
Okay. But let's make it clear. In 1%, it doesn't mean like 1% of total population, or at least 1% of the population that can afford it.
Not really. It's actually, it doesn't say that, but it just says it's 1% of total revenues is being used to invest or purchase premiums for life insurance.
Total revenues, you mean?
Total revenues of the country, GDP.
Of the country, okay. But what about, you know, I mean, have you been able to make a study like, you know, for AB, for example, what percentage of them actually set aside money for life insurance?
It's still low.
Very low.
It's still below 50%. It's hard to penetrate if you sell life insurance as purely protection oriented, because there is this negative connotation that it's and they said it's an unnecessary expense. But if you sell it to them as a savings or an investment type of product, they are more receptive to it.
Okay. Yeah, but you said the figures are very low now, but
there is potential for
like
growth.
What about like 10 years in the past, no? In the last 10 years, so mas mababa pa yon, di ba?
Yes, actually, it was pretty low. There was a time during several years ago, the growth in the life insurance industry was only single digit. But however, this year we anticipate that because the more and more companies are selling investment type insurance products like the unit-linked products, that I think we will achieve a double-digit growth in the growth in life insurance premiums this year.
Okay. Well, speaking of Pru Life came into the country like what, 10
in
years?
In 1996,
11
years ago.
Okay. And you were saying that you came in at a time when medyo deregulate, tama ba yan? Deregulate the industry. What do you mean by that? What was
early in the 1990s, before that, the life insurance, multinational foreign life insurance company mainly comprised only a few players. The largest,
like which ones?
Like Philem Life and Sun Life. And most of the other players were just local. And during the Ramos administration, they deregulated the life. They invited, which encouraged more multinationals to set up life insurance companies here in the Philippines. And
deregulated is the correct term?
Yeah, deregulated is the correct term. So Pru Life, being one of these multinationals, decided to come into the Philippines and expand their business, which is part of their strategy of expanding their business in Asia.
Okay. And Pru Life has been around here in the Philippines. Oh, sorry, for like 10 years. So, but
for 11 years.
Yeah. So Pru Life started in UK, no?
In the UK.
Okay. And it's been there for like 100 years now.
150 years.
Okay. All right. And Pru Life means?
Prudential. Prudence.
Okay, but this is we're setting it aside from Prudential Life, no? Iba to, ibang company to.
Yes, it's a different company,
Yeah.
Prudential Philippines.
So prudence or being prudent?
Being prudent, prudent enough to secure your future.
Okay, but what if if you try to sell life insurance to someone and they say, well, I'm just going to put my money in the bank, no, or put it in some investment. Pwede rin, di ba?
Yes, but there's no element of protection. You can go to a bank or you can go to an investment house and invest in this similar type of products, but you wouldn't have any protection. Should anything happen to you. But with the products sold by insurance companies, you would have protection, and you would also have savings and investments.
Okay. What do you mean by protection? Meaning,
should anything happen to you?
Well, let's say you have an investment, and then you pass
away,
and then what do you mean? The family will not be able to get that?
No, for example, the products being sold by Pru Life, for every, for example, maybe 100,000 pesos that you invest, okay, we will manage this money for you, and at the end of a certain period, you will achieve a certain amount of return on these monies. At the same time, should you pass away during this intermittent period, you will also receive death benefits, which is really more than 100% of what you invested in the company. Whereas if you bought a mutual fund, you would not really have any protection. Should you pass away, your beneficiaries would only receive the amount plus the interest or investment earnings of the fund.
Okay. And your target market is what?
Actually, most of our efforts have been targeting the A and B markets, but we also have products catering to the C